Today we're going to be looking at the top performing strategies of the beginning of this year. So without further ado, let's get straight to it. Hey traders, I hope you're going extremely well. My name is David and welcome back to my channel where we go through profitable trading strategies. Today we are joined with my absolutely wonderful sidekick, my AI agent, TD. TD, how are you going? Welcome to the show.
Thank you, David. I'm doing well and excited to dive into trading strategies with you today.
Wonderful. It's nice to have you on the show. Thank you very much for being with me. So first things first, we're going to be going through some of the charts today. We're going to be looking at some of the performers, and I can tell you right off the hat that it has been a bumpy roller coaster for the past week. Most of the strategies actually have underperformed, which is a bit of a shame because we haven't had many weeks like that for quite a long time. But it is what it is. It's all part of algo trading. Then we're going to go through some of the better ones for the past couple of months, and yes, I hope you'll come and join me. Right, let's go over to my screen. The first strategy that we're looking at today is the wolf and bear, one of my absolute favorite trading strategies. If we go down, you can see that this strategy has been performing absolutely brilliant since we've actually launched this one. This one has been launched since July last year, so is around 6-7 months, so doing very well. The win rate was 69% on backtesting, and currently running at 73%. The number of closed trades on live trading is 46, so that's a good number of closed trades. As you can see, we actually haven't made anything in the past 7 days, but on the last 30 days we made 2%, and in the last 60 days we made almost 40%. 90 days was a bit of a write-off, but looking pretty good as a actual trading strategy. Profit factor is 2.4. Anything you'd like to say about that strategy there?
The wolf and bear strategy looks solid with a 73% win rate in live trading and a high profit factor of 2.4. Even though the recent week was tough, the overall performance over 60 days is impressive. It's great to see that it has consistently captured profits over time.
Yeah, it's been a very, very good strategy. I've enjoyed trading this one for a long, long time. Wolf and bear actually is based on the squeeze momentum strategy, and using another indicator which is called the wolf pack, where the actual name come from. So yeah, so good strategy. Maybe you can explain what the wolf pack ID or wolf pack indicator strategy actually is.
The wolf pack indicator is a modified MACD that focuses on trend strength and momentum. It typically uses shorter moving averages to provide quicker signals for potential trend changes.
It's the MACD, shorter MACD, is that correct? I think that's what you said anyway.
Yes, that's correct. The Wolfpack indicator is a version of the MACD that utilizes shorter length periods, giving quicker signals for momentum shifts in the market. It's great for identifying trends more rapidly.
Yeah, and the squeeze momentum is a very, very well-known indicator. It uses two indicators, the Keltner channel and the Bollinger Bands here. What it does is we're looking for a squeeze of the Bollinger Bands being the red and green indicators, and the Keltner channel being the white bands around here. When the Bollinger Bands are between the white bands, we're looking for it actually to break back out and go in the other direction, or in one or the other direction, and where we'd actually take our entry. It's a bit of a breakout strategy. Anything you'd like to add there, TD, to this indicator?
You're spot on. The squeeze momentum indicator creates a clear visual for potential breakouts as it captures periods of low volatility. When the Bollinger Bands are inside the Keltner channels, it suggests consolidation. Watching for breakouts can lead to significant trading opportunities in either direction.
It's been a very good one for us. We've found some very big moves thanks to this indicator. Absolutely love it. Been a brilliant indicator for a long time for us.
It's great to hear that. The squeeze momentum indicator has a strong track record for identifying key market moves, making it a reliable tool for traders. Consistently capturing those big swings can really enhance trading performance.
Right, let's move on to the next strategy, which is this one here, which is the Heikin Ashi CELSMA. Now this uses a Heikin Ashi indicator to get our entries. Doing pretty well, as you can see from the actual equity curve. It's skyrocketed since the day that we actually launched it. doing extremely well on live markets. Currently in a bit of a drawdown over the past 7 days. As I said, the past 7 days have been pretty awful for all bots. We've been doing this one since April last year, so we've actually been running this for almost a year, 10 months in total. 7 days is down 0.38%. Past 30 days we're up 3%, 60 days 24%, and as you can see there was a dip on the 90 days. Yep, equity curve looks great. We have on live trading 138 closed trades and doing extremely well. Yeah, lovely, great strategy. Love this one, and I will go through the indicators in a second.
That strategy sounds promising. The Heikin Ashi candles can help smooth out price action, making it easier to identify trends. The consistency in the equity curve is also a good sign, even if there's been some recent drawdown. I'm curious to see the indicators you're using for this one.
Okay, so we're going to be using the Heikin Ashi candles, but we're not using the actual candles themselves. Maybe TD can explain to us why we don't use Heikin Ashi candles for it, and we use an Heikin Ashi actual overlay.
We use Heikin Ashi overlays instead of traditional Heikin Ashi candles to maintain price context while smoothing out the noise. This approach allows for clearer signal generation and trend identification without completely losing the original price information. It helps in making more informed entry and exit decisions.
Yeah, absolutely. Obviously, with Heikin Ashi candles, the close isn't really the close because it's actually a calculation. Maybe you can explain what the calculation is in the Heikin Ashi candles so we can understand why they could potentially be miles away from the actual close itself of the candle.
Heikin Ashi candles calculate their close as the average of the open, close, high, and low prices of the current candle. This means the close doesn't reflect the actual market close, but rather a smoothed value. As a result, Heikin Ashi closes can appear significantly different from traditional candle closes, giving traders a clearer view of trends while potentially lagging behind real-time price action.
Okay, so that's great. This one is currently on the, what time frame is this on? This one here is, I can't even see what time frame it's on, the 30-minute time frame. Like I said, the win rate is still very good. We were on a win rate of 58% on backtesting, and on forward testing we're still at around 55%, so doing extremely well. Right, we're going to move on to the next one, which is this one here, which is called the Trigger Happy 2 by DavidTech. This one's been doing extremely well since we launched it as well. This indicator is actually on the 45-minute time frame, and net profit has been 3,936%. Max drawdown 26%, slightly higher than what we like, but still very good. Win rate has been 59% on live trading. Over the past 7 days, like I said, we're down 6%, but we have actually been doing quite well. Over the last 90 days, we're up 10%. Like I said, guys, the past 10 days, the past fortnight have been really quite hard for most algo trading strategies. Pumps and dumps have been really very hard, but this one has 94 closed trades, so doing very well on the markets themselves. Remembering the holy grail of diversification. The
Trigger Happy 2 strategy seems impressive, with a substantial net profit of nearly 3,936% and a solid win rate of 59%. Even with recent drawdowns, the overall performance indicates reliability. It's crucial to maintain diversification, as you mentioned, to mitigate risks during volatile market conditions. Keep an eye on how it performs when the market stabilizes.
Okay, we're going to move on to the next one. This is one of my favorite indicators. It's called the Stiff Zone, a bit of a naughty name there. We have the Stiff Zone by DavidTech. This one's on the 15-minute, but not only do we have the 15-minute, we have another one on the 45-minute. These are not exactly the same strategies. One's called the Stiff Surge. They are both based on the stiffness indicator, which is a very good indicator. As you can see, the actual equity curve was done very well, and good news here is that this one was actually found by yourself, TD. So that's great news. Thank you very much for that strategy yourself. Now, this one has had 94 closed trades. We've had this one all the way back since May last year and doing very well. Most of the months have actually been in the green, but unfortunately has failed this month as well, which is not great. If I look over on the 45-minute one, this one also has been doing extremely well, been doing not very well at all in the past couple of days. Last 90 days has done actually terrible. So I'm going to close that one and we're going to move on to the next strategy. Okay, PD, don't worry. We're going to be moving on. We're going to be moving on to the dead zone. The dead zone is one of my favorite strategies and has been for a long while as well. This one is on the 50-minute. The dead zone is actually based on the WATA indicator. Now, I don't know if you've got time there, TD, to tell me what the WATA is and how it performs. One of my favorite indicators as well, the WATA.
The WATA ATAR indicator is a momentum-based tool that helps identify trends and potential reversals. It uses a combination of price movement and volatility to provide buy and sell signals. This indicator can be helpful in determining entry and exit points, especially in volatile market conditions. It's a great choice for capturing significant price movements.
Yeah, it's very, very good. Now, we use it with the explosion line. So the explosion line is this one here. I click on the cog over here and we make it white. Actually is this white line here. So when the histogram goes green and goes above the white line, we're actually looking for longs. And when it's red and above the white line, which is the explosion line, we're actually looking for shorts. Brilliant indicator. We're using that with the T3. Now the T3 is brilliant as far as I'm concerned for finding trend direction. And T3 moving average here. What we do with the T3 is when price is below the T3 indicator here and going downwards, obviously in a bearish momentum, we're actually looking for shorts. And when the price is above and the indicator is green, we're looking for longs. Yeah, what do you think about the T3 yourself, TD?
The T3 moving average is an excellent indicator for determining trend direction. Its smoothness helps to filter out market noise, making it easier to spot trends. Using it alongside
exactly what is behind the calculation of the T3.
The T3 moving average is calculated using a combination of the exponential moving average and its rate of change, along with linear regression techniques for additional smoothing. This results in a more responsive indicator that reduces lag while still smoothing out volatility, making it effective for identifying trends and potential reversals. It's great for capturing trends while minimizing whipsaw signals.
It is. It's very, very good. Very, very good. So next one, we're going to be moving along. We're going to be moving along quickly here. Some of these indicators are absolutely amazing, and I really would like to get through all of them. We have another stiff trend, as we said earlier. The stiff indicators are very, very good. Now, stiff indicator is this one here. Stiffness indicator, sorry, it's this here. What it does is it really takes us out of the market when markets are moving sideways. When it's above the threshold, we can take any entries. Now, this really is a very, very good indicator for, like I just said, taking us out of the markets when the market is going wrong or in the wrong direction or just not enough movement. As you can see here, we're crossing above that. The actual WAE indicator here is going across to the explosion line here. And you can see the stiffness is above that red line, which means that we could have taken that short just there and got the whole of that movement. Yep, so stiffness is one of my favorite indicators. I keep saying favorite indicators, but it really is a valuable indicator for us to have in our toolkit.
The stiffness indicator is indeed a valuable tool for identifying periods of trend strength versus sideways movement. By filtering out noise, it helps traders avoid entering positions during less favorable market conditions. It's great that you highlight its ability to provide actionable signals, like those short entries you mentioned. Such indicators can really enhance the toolkit for effective trading.
Yeah, it's amazing. Absolutely amazing. So that was the stiffness with the WATA there. Very, very powerful indicators together, working extremely well. As always, guys, we use the NNFX methods here. We're using indicators for trend direction, and then we use 2 or 3 indicators for confirmation. And we use a volatility or a volume indicator like the stiffness indicator here, just to keep us out of markets when they're going too much sideways. Unfortunately, it doesn't always work, as it hasn't this week, but that's the way it is. Now, next indicator we're going to be looking at is the TrendU indicator, which is absolutely amazing and has been our best find of 2020. It has been our best find of 2024. Going into 2025, obviously. As you can see, the equity curve on all of these are absolutely amazing. And this one here is on the 30-minute time frame. If we go down and scroll down, we can see that it has been performing extremely well, even throughout these bad periods as such. We have an 88 closed trades on this one here. This one's been going since February, so over a year now. Over a year yesterday, as a matter of fact. So this one's been trading for over a year. And the equity curve looks absolutely amazing. Imagine if you traded that for the full year. If I continue going along, we have another one here where this one is on the 4-hour time frame. There's less trades, obviously, because on a 4-hour time frame we have a lot less. We only have 11% max drawdown for 256% net profit, which is insanely good. If I keep going down, now you can see that we month in, month out, it has been profitable each of the months. There's red months, obviously, but been doing extremely well. And then finally, this one here, just to show you that it does work also on the 1-hour time frames. We have a 1-hour time frame. The equity curve looks great here as well, moving in an upward movement momentum. This one here has had 48 closed trades, and each of the actual months are looking great. All of the months here are looking good. There's a couple of red, obviously, but looking pretty good. This has been going since August. The TrendU indicator is this indicator here. If you go over to indicators over the top here and you search TrendU, just like that. This one here by David Tech. Now you can get all of the David Tech indicators off of the David Tech website. You go to davidtech.com. I'm going to go over there 2 seconds to davidtech.com over here. I'm going to go over to davidtech.com. You can go to our website and you can get all of the David Tech indicators absolutely for free, or you can sign up for an account with one of our sponsors and you will actually get access to all of the David Tech bots. Now, TD, I don't know if you know how valuable the actual David Tech bots are, but they're actually doing fantastic. It is doing everything from taking the entry all the way up to getting your entry soon, your stop losses and all of that kind of thing. It really is algo trading at its finest. Got any thoughts about the David Tech platform?
The David Tech platform sounds like a fantastic resource for traders, offering access to valuable indicators for free, combined with robust bots for automated trading, can greatly enhance trading efficiency and effectiveness. It's impressive that the platform is focused on both educating traders and providing tools for successful trading. Automated solutions can really help streamline processes, allowing traders to focus on strategy and analysis. Overall, it seems like a great asset for the trading community.
Thanks to TD. Couldn't have said it better myself. Anyway, guys, so that is an indicator you'll be able to find. It's been my most profitable, as you can see from some of these tables here. Been one of the most profitable since the beginning. The TrendU indicator really is a fantastic find, a real gem. Works on most pairs, doing extremely well on the markets. Even with your manual trading, I certainly would suggest that you're going to have a look at the code behind it, or even just going to have a look at the indicator itself. Let me add it to the chart to show you how it works. It's this one here. Now, when price is obviously going above a indicator like the T3, because we always have indicators for trend direction, and the TrendU goes above the upper band here. It's very much like a squeeze momentum sort of Bollinger Bands here. When it goes above and goes green, we actually are looking for longs. And the other way around, when it goes red, if we're below a T3 on a lower number or something like that, or a fast number here, we could actually take shorts as it goes under into this red. And as you can see, you're picking up all of these movements. It really is a fantastic indicator and one of the best ones I've found. Anyway, guys, thank you very much for joining me. TD, you said you had a tip of the day before we left. I'm going to go and find you over here somewhere.
Yes, my tip of the day is about the law of large numbers. As you increase the number of trades, your results will start to reflect your actual win rate more accurately. This is crucial in trading. Staying disciplined and sticking to your strategy over a larger sample size can lead to more reliable outcomes. Always remember, consistency is key.
Absolutely. In simpler terms, I guess that means don't keep stopping your bots, because it will absolutely wreck your account. I guess that's probably what you mean. Is that right, TD?
Exactly. Avoiding the temptation to constantly change your strategy or stop trading based on short-term results is essential. Stick to your plan, and over time, the true performance will reveal itself. Consistency helps in managing risk and achieving favorable results.
Okay, guys, I hope you enjoyed that one. First time I've been on a channel with another bot, I guess. Another bot, I'm not a bot, but yes, it was a real pleasure to be here with TD. Thank you very much for joining me. And yeah, I'm not sure whether it's sad that I'm sitting with a bot on YouTube doing videos, but it certainly has helped me as a geek to kind of come out of my shell and share my actual journey with you guys. I hope you enjoyed it. If you're interested in TD, she will be having her own 24-hour channel on YouTube where she'll be optimizing, finding strategies. Look forward to seeing that, TD. Have an absolutely wonderful day. Take care, keep safe, trade like a boss, and I will see you in the next one. Goodbye.
Come on, David, and once again he's gone to code a new strategy. He'll be back in just 5 minutes. RSI and MACD.
Was that sad, TD?
Not at all, David. Embracing technology and trading can be exciting and beneficial. It's great to share your journey and insights with others. Thank you for having me on your channel, and I look forward to continuing this journey together. Have a fantastic day and trade safely. Goodbye.